JJ, the CPA here. Hope you're doing well. Had a lot of questions today about the CARE Act, the CARES Act that has gone into play. And we're also dealing with the Coronavirus Relief Act. And so I started to shoot some videos to go over the client questions. And so I decided, you know what I'm going to do? I'm just going to go ahead and shoot a live video that anybody can tune into later. So I'm going to go through the questions that I've gotten from clients today. I'll also talk about the Relief Act. I'm just going to mention a couple of things. I will be on Fox News tonight, like the Fox News, like Sean Hannity, not his show, but like that Fox News tonight at 2 a.m. So I'll take it. Tomorrow at 9 a.m. I will be on New York radio station. I'll put a link to that. Live at 9 a.m. on a New York City radio station. And then Monday morning I'll be live 9:30 a.m. on the national broadcast station of Newsmax. More to come. So here's some of the questions, and I didn't put them in any order. The order is as they came through. So the questions I'm going to go over first are related to the stimulus checks that are coming out. So on the stimulus checks, they're $1,200 per adult. It's going to be based on your income. If you already filed your 2019 return, then it's going to be based on 19. If you already filed 18, then it's based on 18. They're not going to take the lesser or the greater. It's just going to be whatever was last filed. Client asked, what if I've changed banks? So whatever you have given the IRS, they're going to send it there. If they don't have a bank account on file, they're going to mail it to you. But I don't know 100% the logistics on it, other than the Treasury Secretary says within 3 weeks. So that law is into play, the CARES Act, within about the last hour. So I would assume within 3 weeks from now, if not sooner. And then as it relates to those, the one other question that I had was the news had indicated that at 75,000 you lose the benefit. What it is that at 75,000 for one adult, it's not that you start losing the benefit, it's that the payment that's made starts to phase out, or the payment that you're getting. So at 99,000 for an individual, you are then fully phased out, okay? And then just double it for married filing jointly. So what does that mean? If you're just an individual and your income's above 75,000 but not above 99,000, you're not going to get the full check, okay? In terms of how it affects the kiddos, it would affect it in the same way. Now in the CARES Act, this is where we've had the most interest, is where do I get it, okay? So right now you can get an SBA loan online. If you think that that's where you're going on the SBA, that's not where you're going to get what's under the CARES Act, which is the Paychecks Protection Program loan, okay? It is not the SBA loan, period, okay? It's not even available yet. The act just went into play. Where do you get this paycheck relief or paycheck protection program loan? From your bank. So when I had indicated that to clients today, the next question was, okay, well, what bank and does my bank do it? So what I would encourage you to do is contact your bank. They are still playing some catch up on it. But basically if they're FDIC, as I understand it, they're in it. So if your bank is going to provide the loan to you, then they're going to take it from there. But I will tell you this, some of the banks, in an effort to get ahead of it and to help prepare, have already indicated to clients. So this led to other questions from clients. Banks have already indicated to clients that they need 3 years worth of banks tax returns, and they need year-to-date financials. Wrong. I'm not going to even argue. I've been asked, where are you getting your information, JJ? Literally from the bill, literally from the law. I'm not relying on anybody else, okay? And then I also work with a national organization that puts on tax seminars. So to be seen. I'm sure that the banks will at some point actually know, and they can then determine what they actually need, and we understand. But here's what I understand it to be when it's asked, what do you want? Hey, real quick, Amanda, the angle of LinkedIn Live is wrong. Does it look weird? Should you move it? So what do you need? Here's what I'm telling you need, okay? You do need to know what your payroll is for the last 12 months. I'm going to get to how, because it's easy. And the reason you need to know what your payroll is for the last 12 months, because that's the basis of how much you get to loan, or how much your loan's going to be. We do have a question here that I will get to. So I believe when I'm reading the act that you need to do 4 things to get the loan. You're going to say that you're in economic distress. You're going to indicate that you do have employees. You're going to indicate that you're going to pay for the qualified expenses, which we'll talk about in a minute, but you're going to continue to pay your employees. And then if part of your loan is not forgiven, that you're going to pay it back. Done. It's an ATM machine. Okay, the banks are meant to be more of a facilitator. They're meant to be verifying your identity, telling you where to sign, and then your money comes. Okay, now, I'm not going to guarantee that because we don't know like 100%, but I'm telling you, when you look in the law, if there was a requirement, because it's in other laws, if there was a requirement for bank statements or tax returns or P&Ls, it would state it in the law, okay? The purpose of the Paycheck Protection Relief Loan is to get the money ASAP into the employer's hands. Not sit around and chase down 3 years of tax returns. That's for SBA loans, okay? It's not getting your P&L, okay? It's not. Now, when I see it from the federal government, what is required, I'll have a video about it. But I've told clients politely, I appreciate that your bank's trying to get ahead of it, but I am not going to start finding your last 3 years of tax returns because ultimately you're not going to need it. And I appreciate that your bank is saying that they do, but I'm not going to argue with them at this moment. We're going to wait, and when I see it in black and white. So here's what I'm telling you. What do you actually need to gather up? Okay. Well, first of all, you should already just have your tax returns, quite frankly. You get a copy of them from your tax preparer required by law. I know we provide one to our clients. Now, I appreciate that clients then just hit delete on the email and then come back to us to get it. But the thing to know is that you should already have these. So if you feel like you want to be fully prepared, well, then gather them up, okay, if you have them. But really what you're going to need is your payroll. So when it is, well, how much can I borrow, okay? So when you're looking at how much you can borrow, and you're saying, well, what are the wages? So here's kind of good timing, so to speak, is that we're coming up on April 1st here in just a few days. So when you're looking at the last 12 months, well, it's now the last 4 calendar quarters. So I had recommended that if you grab a Form 941 for second, third, and fourth, and first quarter of 2020, right? So the last 3 quarters of 2019, first quarter of 2020, okay? You're gonna now have that payroll information. Now, if you have the luxury of working with me and Alliant Payroll, we're already gathering those numbers, okay? You haven't even called, you haven't even asked. I've already talked to Alliant, and they are already gathering those numbers. But here's what you do need if you're not working with Alliant or you're not a client of mine. What you're gonna need is, to really boil it down, what wages? Medicare wages. Medicare wages, if you're looking on a W-3 or a W-2, is the most pure number of wages, okay? So you need the last 12 months. And then on a 941, it's gonna give you the biggest amount of your payroll tax as an employer, which is the Social Security and Medicare portion. You're then gonna know as an employer, do you or do you not pay for the health insurance for your employee? You're gonna add that in. And then if you're doing a retirement match, you're gonna add that in that you've already paid. You're gonna group that together, okay? Divide it by 12, and then come up with a 1 month average. that you will then multiply by 2.5. You can't get lost in the math because this is really, let's just really boil it down. Payroll costs divided by 12 times 2.5. That's your loan. The reason I want to go through that in the beginning here is that that's how much you can borrow, okay? Now, how does the rent and utilities work? Okay, so the rent and utilities has nothing to do with how much you can borrow. How much you can borrow is simply based on your payroll. So how does the rent and utilities come into play? Well, once you borrow the money, it is a qualified expense. So when I say qualified expense, when you're looking at what are you using the proceeds for, if you use it for payroll, rent, utilities, health insurance, you don't have to pay it back. That's where the rent and utilities comes into play. Does IT count and office supplies, meaning do the qualified expenses, once you borrow the money, does paying any kind of other overhead count? No. The law is very clear. I'm reading the law, and it says rent, utilities, period. Now, you'll see a lot of discussion or written things about the February 15th date. So the biggest thing to know about that is when you're looking at your qualified expenses, right? You borrow the money, what are qualified expenses? Well, the rent that you were paying before February 15th is the amount that'll be a qualified expense. So you don't get to prepay rent if you're your own landlord. You don't get to increase your rent to then have more qualifying expenses. Same thing with payroll. You can't just now give everybody a raise because you got this loan, okay? Whatever you were paying your employees before, that'll be the amount that qualifies. So go ahead and give your employees a raise, but the dollar amounts that would be a qualified expense that would then be an amount you don't have to pay back would be whatever you were paying that employee before February 15th. Okay, so if your bank has already told you that it's, literally I've heard, sounds too good to be true, it's speculation, I'll believe it when I see it. With all due respect, it might be your best bud, your best gal friend. Please don't call them about it because you can go to any bank. It's not gonna be dependent on where you bank at all. I bet we're gonna see flooding from especially the national banks where you could probably do it online, submit the documentations without leaving your couch, okay? The banks, they're either with it or they're not. And I'm telling you right now, the banks that are with it already got checklists. Now, they're kind of waiting for the final word, but with all due respect to banks, if you, by the end of business Friday, don't know about this, don't use that bank. Just don't. Your banker's not gonna help you any more than any other banker because it's not about a relationship. It's about, are you in economic hardship? Do you have employees? Do you plan to pay employees? And if your loan is not forgiven because you don't spend it on qualified expenses, are you going to pay it back? You just got the money, okay? Maybe you just want to look at who your banker is and say, hey, thanks for helping me, okay? No offense to them, all they did was provide an ATM machine to you. So not at all am I downplaying banks. All I'm saying is do not for 1 second hesitate to go to a different bank because this money is going to run out. It's going to run out. Because I talked to a client yesterday and they're going to get $7.5 million off of this, okay? Because it's a max 10 million and it's per business, okay? Throughout today, if I were to estimate, I've got clients that are probably going to get $2 million in this. It's going to run out because it's not for Oklahoma or Oklahoma City or the central states or where there was a tornado. It is the entire country. You have zero time to wait on a banker to fumble the paperwork and you don't get it. All right. Hey, I will go to the questions here and then I'll go back to the other client questions. So how does self-employment get the loan? So on the self-employment, I will do a separate video on it because it's a little tricky, but the bottom line is yes, it is absolutely available to those that are self-employed. The only reason it's a little tricky is that if you're a self-employed individual, that your income is not regular, right? So the traditional loan that's being provided here based on payroll is, well, here's what it was for the 12 months divided by 12. For self-employment, it is in essence very close to that, right? But when you're looking at, well, how much to borrow, is it on your net self-employment income? No. So that's why there's a little trickiness to it, because you know as well as I do, you're going to be looking at, well, what is your self-employment income? Typically, what's on your 1099s? So you have to provide to later, and hang with me on the self-employed questions. You're going to have to provide later when it's time to get forgiven 1099 miscellaneouses. So the short answer is absolutely yes, and look for the video to come on that in terms of the details. Is the extension of unemployment a good option for self-employed? Absolutely, okay? Because here's the thing to know is if you're self-employed, if you haven't already taken a hit, you're gonna take a hit, right? In some way, shape, or form. Now, you might have had plenty of AR or plenty of business, but at some point, maybe some of your customers, et cetera, are not gonna be able to pay you what they were. They're gonna have to extend it, et cetera, et cetera, et cetera. There is zero shame in getting unemployment at any time, okay? But there's definitely zero shame in getting unemployment in the conditions that we are under. So you need to get it. And here's the thing to know about the federal unemployment, whether you're self-employed or not, it is with the federal government. Now again, because the CARES Act was just put into play, an hour and 45 minutes ago, in terms of the logistics of how it happens is not known. However, what I've read is that, and when I'm telling you what I read, it's from the bill, it's from the law, okay? It's not what I heard in some article, okay? I'm the one writing articles. I'm the one putting the information out there that I read. But what I'm saying on that is that when you're looking at the unemployment, it would be administered by the federal government, not the state, going to be administered through the U.S. Treasury, which is going to be the IRS, administered as in that's where you're going to go to apply. That's where you're going to go and provide your information. I don't know that, and I don't see that it requires you to be on unemployment at the state level. And that's good news for self-employed individuals, because self-employed individuals, at least in the state that I'm in, as far as I know, don't qualify for unemployment in any way, shape, or form. So for self-employed, go and get it. It's up to $600. I've not seen the calculation, and I'll just be honest with you on the self-employed part on the unemployment. I've gotten 5 hours of sleep in the last probably going on 72 hours. But I haven't even gotten to the details of that aspect of it on the self-employed. All right, another question. Does the CARES Act apply to 1099 workers? Can a biz add staff, i.e. They laid off workers from other companies? Okay, so I'm going to tackle, we got several questions. Does the CARES Act apply to the 1099? If you just joined us, the answer is yes. The loans that I've typically been talking about is based on payroll, but those that are self-employed, it would be based on your income. Look for a video to come tomorrow where I'll walk through that self-employed portion. Can a biz add staff? Yes. So the thing to know is that when you're getting the loan, okay, it's based on your last 12 months of payroll. And when you then look at what are qualified expenses, it is not for the employees that you had over the last 12 months, it's for payroll and wages, okay? So if you're adding staff, it's gonna be a qualified expense. Now, if you laid off, okay, so I think the question is they would be hiring workers that were laid off from other companies. Okay. Hey, do you mind? It's really hot in here. Yeah. And then add them to your staff and as part of the CARES Act. Yes. So, sorry, I read in code there. So probably what's trying to be clarified here is that you hire new people. Is the money that you got and borrowed on the Paychecks Protection Program going to be counted when you spend it on new employees? And the answer is yes, because whoever's doing that, God bless you, because that's exactly what this thing is about. It's to pay employees. And so, I was talking with a client yesterday, and one of the things I've been telling my clients is do not let go of your employees, period, the end. You're not doing them really any favors in this short period of time. In the state of Oklahoma, we had a a state shutdown for 21 days, I think starting just a few days ago, in essence. But I said, please don't do anything with your employees. Don't lay them off. Don't do anything. Just wait a few minutes, okay? Pay them, okay? But the reason is that in this CARES Act, this is exactly what that Paychecks protection program is all about. So the client that I was talking to, they didn't lay off any clients, but they knew of a competitor that had just basically said, hey, that competitor just said to the employees, go home, you're done. And by the way, we're doing you a favor because you can go collect unemployment, okay? That's not a favor because unemployment's never gonna be what that employee has been making, number one. Number two, that employer now, unless they bring everybody back, doesn't have any qualified expenses as they move forward. Now, what do I mean by that? Now, that employer that had all of these employees, okay, they're gonna be able to get a loan because they had a lot of payroll, okay? So they borrow the money, but now when they go to spend it, they're not gonna have enough or as much qualified expenses to allow part of their loan to be forgiven. Okay. Oh, I've had a lot of clients have said, does this bank do it? Now, here's the thing. The kind of relationships I have with my clients and the bankers, I mean, I already knew the answer, but I'm just encouraging you, those that maybe aren't clients of mine or you're not working with Alliance Bank, Jason Osborne, just contact your bank. And in some ways, it's a good little test because if they're like, huh? And say, never mind. And then find another banker, start asking around. I've got 4, okay, that they'll take on anyone, okay? And you know why they'll take on anyone? Because there's not any qualifications here. There is no qualifications here other than the 4 things that I already said. You're in distress, you have employees, you're gonna pay employees, and you'll pay back whatever loan portion is not forgiven. That's it, okay? Now, people have asked, where am I getting my info? I'm getting it directly from the law. You can go to my website, jjthecpa.com/cares. You can also go to jjthecpahelp.com/cares. And down at the bottom, there's a picture of this guy right here, JJ the CPA, and on it is the 800 page, and you can just read it. You can just read it for yourself. Okay, because it is in English and it does make sense, and you don't necessarily have to have someone interpret it. I've really loved it that I've had clients that have asked me questions because they went to that bill or to that law versus they forwarded me an email from somebody else or a buddy or a bank and were asking questions because my job is to educate my clients, not everybody else. All right, wages. Oh, this is a big question. I got this several times. So wages paid by a PEO. So what's a PEO? Professional Employment Organization. So with that, if you are somebody and technically your employees are not on your EIN for payroll, right? So this would be like a leasing company, right? So they're your employees. You tell them what to do. They come to your office. You hire, you fire, you dictate, you do everything. But in essence, you've hired a service that is acting as not really the employer. They're acting as a centralized provider of benefits in being a bigger group, okay? Without going through why the reasons. Here's all you need to know is this. It is clear in the law, the IRS law, that the common law employer is going to be the ones that include the wages. So when I had talked earlier and, hey, go get your 941. Well, the reason I got a couple of those questions is, it's like, well, we don't have 941s in our EIN because we have them through a PEO. So the thing to know is that there's nothing in here that I'm seeing that you need to provide a 941 up front. You're gonna have to prove it on the backside, okay? So here's the thing, we're in a crisis right now. The house is on fire, okay? we're not going to worry about who's going to clean it up when we put the fire out right now, okay? We're not going to worry about, well, who will come and clean the pool out when the fire's out. What we're going to worry about is getting a hose to the fire and getting it out. So with the PEO, what you're going to need to know when you're borrowing the money is, though, what are the loans? So I talked about it earlier. You need Medicare wages. So if you're asking the PEO, ask for Medicare wages. That's box 5 of a W-3 or W-2, Medicare wages, because that's the most pure number of wages. Ask them for the payroll taxes, okay? That'd be the employer portion of Social Security, Medicare, and the FUTA, federal unemployment tax, and the SUTA, which is state unemployment tax, okay? Because that's included. If the PEO is providing health insurance, so to speak, and the employer, your client, you're paying it, okay? It's just that you're paying it to the PEO that then pays it to the health insurance company. Then ask the PEO, how much health insurance are you paying? And then if you have a PEO and there's a retirement inside of it, the match. So your PEO can make this super simple, or if you're with Alliant Payroll, they're gonna make it super simple for you because you just need these figures. Why? Because you're gonna add those numbers together, divide it by 12, multiply by 2.5 to determine the amount of loan that you can get. Okay. I've had some, and you know, I get it right now. We're home. So we're doing analysis, which I love. I mean, that's I've been pressing and stating that for my clients, individuals and businesses, here's what we're gonna do. We're gonna assess, we're gonna hold, we're gonna wait, and we're gonna see. So guess what? We've done it. Boom, we've got the CARES Act. We're gonna do a little more assessing. So I love it that there's some assessing going on, but here's some of the questions that I've gotten. I don't wanna borrow more than I need, so I wanna figure out how much my payroll is gonna be during the covered period and how much my rent and utilities are, because I don't want to borrow more than what I need. You know what? That's great in the sense of, yeah, figure that out, and then you're knowing what your expenses are. I actually have a worksheet on my website. All this stuff's free on my website, but I've got a worksheet there where you're trying to figure out what's your cash position in 21 days. But it would be good to know, especially if you've made changes in your payroll for whatever reason, you know, what are those costs, okay? So, but when you're saying, I don't want to borrow more than I need, makes a lot of sense in a normal circumstance. But here's where I don't want you to get caught watching the paint dry while you're doing analyses, okay? And then know this, I'm here for my clients. I want to help them with what they need help with. And typically the clients that are wanting to do this analysis, they just know how to do it, so to speak. But if you're reading somewhere about, well, how much do you know that you need to borrow because what are your future expenses? I want you to remember, the loan is not based on your future expenses. The loan is based on the last 12 months of payroll, period, the end. The amount of forgiveness on the loan is based on your future expenses for those qualified expenses, payroll related costs, utilities, rent, health insurance, retirement match, right? But here's the thing, and I'm not trying to be facetious, but I want you to remember I've had 5 hours of sleep in the last, 3 days. So I won't try to be too punchy, but you know, it's fun to make it entertaining. So what you don't want to have happen though, is that your house is on fire and on the street is a 30-foot hose, a 20-foot hose, and a 10-foot hose. And your house is on fire. You don't want to go in the front yard and go, well, I mean, now, are we 12 feet from the street? You know, maybe it's 17 feet. Go grab the tape measure real quick. How far, because I don't want to use that 30-foot hose, okay? I mean, if I only need a 20-foot hose, then I'm just going to get a 20-foot hose here because I'm not going to be wasteful here. Get the 30-foot hose, okay? Because you know what the first qualification is to this? That you're in a crisis, okay? So, you know, no offense, but if you're kind of doing this thinking, well, hey, so I could invest it and, I could buy that car. Okay, but that's not what this loan is about. Even if you have the qualified expenses coming, I'm just saying that's not the spirit of this. The spirit is the government's coming and saying, here's a 30-foot hose, here's a 30-foot hose. And you need to take it and put the fire out, not sit around and try and figure out if you only need a 20-foot hose. Now, let me back it up though, okay? Because this is the part that when I've talked to these clients, they're like, oh, okay, that makes sense. Why I don't need to get too caught up on how much will I need in terms of how much then do I want to borrow. So in normal circumstances, that's how you do it. Are we in normal circumstances? No. What I'm saying here is this: when you get that money, there's no payment due for a long period of time. There's no interest being assessed for a long period of time. There's not a minimum payment for a long period of time. There's no prepayment penalty, okay? So let's go a different way, okay? There's an ice cream truck coming down the road, and what it's handing out are $100 bills. And it's getting ready to pass your house, and they're gonna say, how many $100 bills do you need? Because all I need is this dollar amount based on your payroll, okay? And they're trucking along, okay? You're gonna just go, here's the number, and they're gonna throw you the dollars, okay? And now you're holding these dollars in your hand, literally, right? You're holding these dollars in your hand, probably putting it in the bank, but you're holding it, okay? So let's say that you get to the end of the qualified period, the covered period, and you got $75,000. You don't need to beat yourself up and go, man, I only needed 50 grand, what did I do? Like, seriously, think about this. The ice cream man just gave you $75,000. And if we're gonna now just go with cash, so you sat there and you peeled off 50 grand over the period of time, okay? Here you go, there you go, there you go. And you're like, I have 25 grand left. Like, I borrowed too much. You know what you do with that 25 grand? Okay, first of all, you can just start making payments on it, but you know what you really can do? You just go, hey, ice cream man, yeah, hey, here's your 25,000 back. Okay, you get 75, you only use 50, you give 25 back, right? If this is like when your parents, when we were kids, right? Your parents handed you a 20, okay? And they said, bring me the change. That's what the government's doing here. They're handing you a 20, saying use what you need, go get what you need, and bring me the change. Don't sit there and go, well, so but if I do that and it's like, here's your 20 bucks, go, get out of here and go take care of your business, okay? So in some ways, don't get me wrong, if you're doing too much analysis here, how much are you that worried about it then? In the sense of, you should just be going, give me the 30-foot hose. All right, I let an employee go. I heard I have to pay that employee. False, false, okay? What does that mean? So someone let an employee go, and in fact, not funny, but they let the employee go because they were already planning on letting them go like 2 months ago, okay? This person was already headed out the door, all right? And then when this hit and was coming, it was like, you're going now, okay? But the assumption was, okay, well, shoot, because there was a U.S. senator that said, if you don't pay the employees that you were paying before you got this loan, you're going to have to pay it back. Okay? That senator's, you probably know who I'm talking about anyways. He's from the South, and he's a cool guy. But anyways, what that's really saying, though, is that if you borrow money and you don't spend it on payroll, yes, you're going to have to pay it back. There's no matching up employees here, okay? So, no, and then you're not going to pay someone that already has left. Now, you can retain them, or you can say, hey, good news, I can bring you back. That employee might be like, uh-huh. But anyways, so, here's boy, this was question number 1, but like I said, I just went through my text and went through. Why would I get a Paycheck Protection Program loan instead of an SBA loan? So, SBA loans right? They're sexy, right? Like, oh, I got an SBA loan. What you got? Now, don't get me wrong, that's what they had before the CARE Act came out, right? Okay, so I'm not knocking it at all. I'm tired. What I am saying is that you're gonna pay the SBA loan back, and with the Paycheck Protection Program, you have an opportunity that you don't pay back. What other questions are there? Well, the question was, well, but the interest rate seems to be the same with the Paychecks Protection Program loan and the SBA loan. So what does that matter? Because if you get money from the protection program and you use it for what it's meant for, you're not going to pay it back. You get an SBA loan, you're paying it back, period. Okay. So who cares? The interest is basically the same, but you don't have to pay one back, you have to pay the other. All right. Will you get, these are from clients, will you get me a list of what I need? Yeah, I'm going to come up with that list because I'm trying to help people, but the list is going to be directed by the government, not directed by me, not directed by the bank. It's going to be plain as all get out what that list is, but rest assured I will get the list. But more what I'm just saying to everybody is be on the lookout for someone. You bet. Thanks for watching. My bank said that I need 3 years of tax returns. So if you're just joining us, that's a wonderful bank for normal traditional loan purposes. There's no reason to call that bank back to continue anything with them related to the Paychecks Protection Program if they're still telling that to you on Monday, because it's not going to be the case. This is meant to be, let's go back to the fire hose thing, okay? And I love bankers, right? One of my best friends is like the best banker you've ever met. Actually, like 3 of them. But anyways, the banks are just used to wanting to protect the bank, right? So I've got a book back here, and I talk a lot about it, and I really stick up for the banks, right? I really talk about why you should get a loan and how and what the bank's goal is and what they're really looking at. I mean, it's not about per se, you know, they're a good friend and they give you the loan. It's not about anything other than, will you be able to pay the loan back? Okay? So I'll try and say this calmly. Under the Paychecks Protection Program, if you can't pay that loan back, the government pays the bank. Okay? Don't even be rude, bank. Okay? In the sense of thinking you're lording over this. Because you ain't. Now, let's think of it this way. The banker is usually used to, your house is on fire, and they're like, oh, let's help you out, but how far is it from the road to the street? Because we got a 30-foot, a 20-foot, and a 10-foot. There's no reason to give you more of a hose than you need. And normally that makes sense, okay? When your house is not on fire. Okay, when you go to Home Depot and you're buying a hose, you probably want to go, okay, do I wrap it around this house? And then I go over here, so I might need a 50-foot. When your house is on fire, you go, give me the longest one. But if your banker's going to still stand there and go, whoa, hang on, I'm telling you right now, if you want, you're going to just literally body slam them, move them to the left, and go grab the 30-foot hose and get the fire out at the bank that actually knows what they're doing here. Because you shouldn't have to come up with that. Boy, can you tell that here's why I get riled up about that. It's not really about the banks, okay? What I'm getting riled up about is that God bless the government for providing this. This is gonna save a lot of businesses, and I'm not complaining about it at all. It's very generous, okay? And I understand we're talking about a battleship when we're talking about the US government, and I'm not complaining at all. But my clients needed this money 2 weeks ago, if not 3 weeks ago. So I don't want to hear for one freaking second from a banker that they need something that they don't need, that's going to delay my client from making payroll or firing somebody or paying rent because some banker says they need some document that they don't need. Because what they're doing is letting the house burn. That's what's going on. Because the bankers are thinking that you have a banker that doesn't know what they're doing. Okay? They're letting your house burn. You don't have time, and guess what else is going on here? And this is where the anxiousness comes in on behalf of my client. It actually has nothing to do with this banker that I'm picking on, this fictitious banker that I'm picking on. You know what? The money's gonna run out. It's gonna run out. Get it? You can't sit around and wait. All right. All that emotion is on behalf of my client, okay? That's just loving the clients I work with, and I want them to get the relief that they need and deserve right now. We're already gonna have to wait to how does this work and how do you get the checks and where you log in and all. We're gonna have to wait for all that crap, but don't need to wait longer to provide pieces of paper that the bank doesn't need. And I'm gonna get to why the paper will be important later. All right. Does self-employed lose out? No, self-employed does not lose out. Self-employed is going to get unemployment. Self-employed is going to get these loans. I will do a video on this. I don't have a lot of clients that actually are self-employed, so to speak, meaning they get a 1099 and they're filing a Schedule C. Like 99% of my clients, they may get a 1099, but it goes into an S Corp or a partnership, and we're doing things that way. So I will now get out a video because I've heard a lot of requests for it for people that most of them are not my clients, but nonetheless. So do we know how to apply for the Paychecks program yet? My bank said I had to apply for an SBA first. So totally false. I already know that I've already seen 5 banks that have sent emails to their clients that said you have 2 options right now. They're completely separate. If that banker's saying that by Monday, love them. I mean, they're probably the best person ever. They contributed to your kid's soccer team, and they're just the best person ever, okay? You don't got time for that. Your house is on fire. Get to a bank, okay? Email me. I'll send you to one of these 4 that will get you the loan. So I don't mean to pick on your banker, but come on, okay? All right, so do we know how to apply for the Paychecks Protection Program yet? Here's what I'm hoping, okay? Because when you're talking about an SBA loan, you can go online and apply for it, right? I've had a few clients and I was like, time out, don't do it. Let's figure out what's in the CARES Act. And then once the CARES Act passed the Senate, I kind of went out of my mind trying to make sure everybody knew, don't get an SBA because it's either or, okay? This is not an SBA loan, okay? It's a rescue relief loan, okay? Now, it may technically somehow fall under the Small Business Administration, umbrella, okay? But this is supposed to be administered by the U.S. Treasury. This is supposed to be literally the wonderful government, and I am saying that sincerely, is in a ice cream truck coming to your neighborhood, throwing money out the side based on what your payroll is, okay? You got a banker getting in the way of that? I don't even know if that's someone you want to continue working with them. But anyways, all right, okay, so this is an add-on. All right, is the amount that is available for 1 month a single shot? So I think I get what the question is. First of all, single shot for the Paychecks Protection Program, yes, in the sense of what's your payroll divided by 12 multiplied by 2.5. Like that's the max you're gonna get. I don't know if you would want to go, well, here's the max that I can get and I'll take half, and then if I want more, I'll go get half later. Maybe, but you shouldn't do that. It may run out, okay? And then is the amount that is available only for 1 month? I'll answer it 2 different ways, trying to guess maybe what that means to try and be as helpful as possible. My understanding is that the loan would be available until they run out, okay? Or June 30, okay? Now it may just be until it runs out. But the short answer to that is don't wait. Get into the bank immediately. It's good to get in touch with your bank because you're going to know right now if they're with it. Because if they're like, you bet, we're waiting. And even if they send you a memo right now and they say, hey, here's how it works and here's what we're going to need, and it does include, you know, these tax returns and all that stuff. What it should tell you though is that your bank's on top of it. Okay. If they don't need the tax returns and the P&Ls, even though I've been picking on the banks, they don't want them. They don't want them, right? They're going to want the minimal amount of paperwork from you as well. And then is the amount available only for 1 month? So when you get the loan, okay, it's whatever you spend the 8 weeks following the time that you got the loan. And if you look at the covered period, it's February 15th to June 30, okay? So I need to do a special video on that to really clarify and hone in on that, which is it's not actually the expenses from February 15th to June 30 that all count. It is those expenses, okay? That's your covered period. That is absolutely correct what I said in a previous video. But in terms of, well, what counts as the qualified expenses, it would be the 8 weeks. That would be 2 months, okay? If you have a shareholder with more than 20%, do you need their approval? Oh, wow. That's a really good question. So that might be, well, you know what? I'm gonna throw one out on that one, and I really like that. I'm actually gonna save this to do a special video on that when I figure out the answer on that. So if you'll write down to whoever that was, if we know, we'll make sure we tag them to tell them when I find the answer on that one, like the official answer. But let's just go and look at normal loan purposes, okay? So the fourth thing that I told you, right, you have to be in an economic bad position. You need to have employees, you're gonna pay employees, but then the last requirement there, right, the last requirement of the 4 is that you will pay back whatever is not forgiven. So if you're the only one that's signing that, then in essence, you're gonna be the one that would need to pay that back if the business did not, okay? So if you have a shareholder with more than 20%, do you need their approval? I would also then say, well, you need to you need to look at your bylaws. You said shareholder, so I'm assuming bylaws. If it happens to be LLC, then you know your operating agreement. Because it is a liability, and you would then need to follow whatever is in your bylaws or your operating agreement. But I don't think that there's gonna be the ice cream truck coming by saying, hey, before I throw you this 75 grand, are you the 100% owner here? You know, do you have approval for this? I don't see that that's a part of this process at all. It's gonna be who signed off on it. So probably really need to talk with your attorney, and it always sounds like a cop-out, but the reason to talk to your attorney is that they will be able to help you interpret your bylaws and your operating agreement to see what that says. But I think on the side of the government, it's gonna be, well, whoever signed off on this thing. Okay. Oh, this is a really good one because the automatic assumption is no, but the true answer is yes. And here's the question. Does my salary count as an owner? Yes. So the first thing to know is that if you are a partner in a partnership, by law, you can't pay yourself wages. If you are, you're not going to jail, but it is illegal. You cannot. So we're now going to talk about S corporations and C corporations here, right? Because this isn't just for flow-through entities. If you have less than 500 employees, then you qualify for this. But the owners, okay, regardless of ownership, okay, their salary counts, their payroll, okay? I'm going to clarify that one in a minute, so stay with me on that one. But whether it's an owner or not, only up to $100,000 of salary for one employee is going to count when you're looking at your costs for the last 12 months. I'll say that another way. If you're looking at all your payroll costs in the last 12 months and you have two employees and one's making 150 grand and the other's making 125 grand, well, when you're pulling together your 12 months of payroll expenses, on those two employees, you only get to include the 100,000. Or another way to look at it, kind of the inverse, I'm saying the same thing, but in an inverse, is you would take the total cost minus $75,000, okay? Because you had one employee making 150, well, 50 of it doesn't count. You had another employee making 125, 25 doesn't count. So it's that max. But the owner is included in that. So I do have clients, and they're the only employee, right? It's just how the business is structured. Well, up to 100 grand plus your health insurance and your payroll taxes and any kind of retirement match. So on the retirement match, we're talking about that 3%. If you're doing a sexy SEP double balance, pull a bunch of money in, double contribution, look at what I'm doing, I'm putting a lot of money into retirement and getting to write it off program. That's not what we're talking about here. We're talking about the employer match, in essence, in a simple or a 401k standpoint. But the one thing I want to make sure is, because it is easy for almost anybody, bankers and the clients and even investment advisors, is that distributions are not wages. Period. The end. Okay, distributions are not wages. Now, here's what I mean by that. It might be easy to go, okay, so hey, as an owner, the last 12 months, through Alliant Payroll, I paid myself $50,000 a year, okay, and then I took a distribution of, $5,000 a month, so I paid myself $110,000, so I get to include 100. Actually, not absolutely false, can't happen, not true. Period, the end, because this only includes W-2 wages. So in that scenario, the owner that pulled $60,000 in distributions, none of that will count in determining the amount of loan that business will get. What will only count is the $50,000 that was paid as wages to that owner. Now, I also had a question of, okay, well, what if there's wages to my spouse? What if there's wages to my kids? Okay, well, if you're paying them wages, it's included in the figure. So there's nothing in here that I've come across that's going to preclude that. And don't get me wrong, and I don't think anybody's thinking this way, but what you do want to do is remember the spirit of this law. And the spirit of the law is, your house is on fire, we're bringing you a fire hose. It's not then trying to find out how you can get an extra fire hose, right? For the next time, this is just get your fire hose, it's 30 feet, get going, not necessarily trying to maximize what you can get when you don't really need it, right? So if you're paying your kids and they're not really doing anything, yeah, maybe you're paying them each, $6 grand a year, so you got $18,000 in salary to them. Yeah, you can get the loan on it. There's nothing wrong with it, and it probably would be quote unquote a qualified expense. I don't feel like it would, but see, that's just the opinion of JJ the CPA, and it's a false opinion in terms of what's allowed. It's the payroll, and then you have your qualified expenses. And don't get me wrong, I know there's family businesses out there, and that kid that's making $6 grand a year is working their butt off, right? So, can my real estate company get the loan? So I got asked this no less than 10 times. Which is a good question, right? Because it's a business. But the reason is for the clients that I have that have real estate company defined as it owns real estate and rents it out, right? So this is not a real estate company that manages or sells real estate, right? Because that's a service and there's going to be wages in there. But in the clients that I had that have a real estate company that owns real estate, there's no wages in it. So the reason that business won't get that loan is that it doesn't have any wages, because the loan is absolutely based on wages. Is the rent and utilities also a factor of 2.5? It's a good question, and when I did an example, the video that I posted yesterday, which you should check out, that talks about the loan forgiveness aspect, it really is easy for your two sides of your brain on this transaction to want to come and work together, but you have to really look at it separately, and that is, Your loan is based on 12 months of payroll costs divided by 12 times 2.5. So that factor of 2.5 is done and over with. It doesn't have anything to do in determining your qualified expenses that would then lead to loan forgiveness. Okay, it's just the rent and the utilities. All right, let's see. I think we only got one page here. I've been asked, are you getting us the loan? Boy, I really appreciated that. But the answer is no. It's not anything, so even if it's administered by the IRS, it's not on a tax return, it's not a form that I file, I know I'm stating the obvious, but I'm not a bank, I'm not a lender, so it does have to be done through a bank, okay? But I bet you that there's gonna be some of the national banks that'll be on top of this like that, helping to get those loans out. So, another question that I had from a client, actually 3 of them, was, well, I don't want to borrow more than I need because I don't want to pay interest on a loan I don't need. Absolutely, in normal circumstances, but remember on this Paychecks Protection Program loan, you're just going to have to watch other videos. There's only so much detail I can give every single time, but there's a period of time that you don't have to pay the loan. Okay, you're not making you're not making an interest payment. There's no interest that's being accrued. Okay, and there's no prepayment penalty. So it's not a valid concern in my opinion, because when it comes to, okay, now they're going to start charging interest. Now they want a payment back, or they want a payment, or they want their money back. If you didn't spend it and you have it, there you go. So if you don't want to pay interest on a loan that you don't need, then when it comes time to figure out if you spent everything, then you can just give the money back. Why borrow the max? It's because your house is on fire and you want a 30-foot hose. This is a gift. I had someone comment and they said, so basically, is this just a gift from the government to pay payroll and rent and utilities? Yeah. I mean, it's pretty freaking awesome. Now, I understand we can talk about, well, how's it going to be paid for and all that good stuff. You know what? No offense, government, and anybody concerned about that. It's a valid probably question and interesting to think about, but who freaking cares from the standpoint of, I'm telling you right now, I got 10 clients that are on the brink. Okay? They needed the money last freaking week. Okay? We're going to talk about payroll tax credits in a little bit, which are great, but a payroll tax credit just means that you're not going to pay in as much. Okay? This is putting money, this is infusing money into my clients that I've known and love. I've got a client that's been a client my entire time of having my practice. I went out in May and I think they were a client in June of 1997. Okay? And this is someone that's very well prepared, massively, like the best client you could ever imagine. No real debt other than just stuff that's necessary, right? But any small business is bankrupt in 21 days if there's no money coming in. Just is. Now, I've got clients that maybe they've got more money built up. That's great. But I'm just saying the average small business, even outside of my clients, are in a position where they need that money. So yeah, it's a gift, but it's a gift if you use it for what it's intended, okay? So if you're Rachel off of Friends, okay, and Rachel on Friends was known for, she'd get a gift and then she'd go return it. Okay.
On YouTube?
Okay. So yeah, it's a wonderful gift. Use it for what it's intended for, which is payroll and rent, utilities. Okay, good question here. I don't pay rent, I have a mortgage, does that qualify? Excellent question. Actually, I don't even know if I got it down, but I was asked that twice and I'm actually in the same circumstances. So if your business that has the payroll has the mortgage, then the interest portion absolutely counts. Boom, it's a qualified expense, the interest portion, so not the principal amount. But if you have, so the person I was talking to about it, they own real estate and have a mortgage, but it's in a completely separate business. So even though this business, which is renting. They own this business 100% and they're renting from this business that owns the real estate. So separate entities, okay? Even though own 100%, own 100%, okay? Because it's in a separate entity, then that interest would not count. It would have to be the entity that has the payroll, whatever's in that. Now, let's also, I appreciate that question. Let's also mention here that, just because your business is paying for it doesn't mean it's a business loan qualifying for these purposes. So, and hang with me, because the most important part of this paycheck protection program is, okay, how do you actually get it forgiven though? So I'm going to get to that. But that's where the documentation is going to need to be, and what you're going to have to provide is documentation to show that this mortgage was in that business name. So if it's in that, then it's absolutely going to qualify. It doesn't have to be a loan that was for purposes of paying employees. It absolutely even says mortgage. Thank you for that. Oh, okay. Now, this one here, okay, a couple of clients that brought it up, I was like, man, you're just with it. Is it taxable? Is this loan taxable? No, but here's why. What you use the loan proceeds for the qualified expenses, you don't get to deduct that. Okay, so that's a little bit of a mind bender. What does that actually really mean? Here's what that means. It's absolutely works like a grant. And if you don't know how a grant works, here it is. So the government's going to give you 10 grand to pay 10,000 in payroll. Okay. Now, logically, you got your 10 grand, it's a loan. Okay. And traditionally, you then would write off whatever it is that you just paid from the loan proceeds, right? So if I borrow 10 grand and now I pay 10 grand to employees, I have a $10,000 expense. You're right, okay? But it wouldn't be tax deductible. So if you get 10 grand from the government in this program and you spend 10 grand on those salaries and wages, okay? Yeah, it's an expense to your business, but it's not tax deductible because you didn't take in the income. Let me say that another way. When you get this money from the government, if you just held it and did nothing with it, you owe it all back, okay? So when you get the money, in essence, it's a liability in the sense that you now have a responsibility to use it for what it was intended for, and to the extent of what you use it for properly, you don't have to pay it back. So as you use it properly, your liability goes down, okay? Let's go still with the 10,000 from the government, okay? Get 10,000 for the government, but you only have 5,000 in the qualified expenses, okay? Well, you got to pay back that other $5,000, so that's still a liability to you. So wipe that away, just more to hear this. When you get the loan, it's still a loan, okay? It's not taxable to you. What you use it for is gonna yield no deduction. And for the couple of clients that understand debits and credits, basically when the money comes in, you debit the bank, okay, and you credit the liability. And then as you spend money, you're crediting the bank. This is on a GL, this is on a trial balance, and you're debiting the liability. You're not debiting the expense. All right. Yeah, so it's not an SBA loan. If you go online right now and you see SBA and 25,000 and, provide all these documents and this and that, this is not that, okay? I'm feel really confident that they're gonna make it very clear you're not getting an SBA loan, or you are getting an SBA loan. So it's not an SBA loan. I've been asked, have you talked to my bank? So if you are with Valiance Bank, the answer is yes, okay? If you're not with Valiance Bank, I probably already answered you, but here's why I'm actually bringing that up, not specific to my clients, but the reason I'm bringing this up is get a hold of your bank, okay? So whoever's telling you about it, They're giving you the information, but here's who's gonna be your ATM machine, just the bank, okay? So think of it this way, like for real, think of it this way, okay? You're out and about, right? Because we're all very loyal to our banks, and it's still gonna be massively hard to digest on this, because I had a long discussion with a client about this today. But when you're out and about and you need $100, okay? You got your ATM machine. Do you only go to your bank? Now, some of you may say yes, because if I go to my bank, you know, I get the money out and I don't have to pay an ATM fee. Well, I'm one of those, but that's because my bank's like, you know, I can hit a golf ball and hit my wonderful bank's ATM machine as well as their branch. So I typically will do that, but if I'm downtown, okay, I'm not gonna drive all the way up to the branch here and get my $100 out to drive all the way downtown. You know, what am I gonna do? I'm gonna just find the nearest ATM machine. That's how you need to treat this loan. You're finding the nearest, easiest ATM machine. There's no loan fees, okay? So you don't need to go, well, what's this bank charge? What's that bank gonna charge? There's no loan fees here. The banks are gonna make out by bandits. So pity the fool bank that's gonna make this hard, because they're losing out. And when I say making out by bandits, they're facilitating it. They're gonna make money off of it, not from you. But talk to your bank. And then when you're going to get this loan, treat it as though you are going to get money out of an ATM machine. Point in saying all that is, I doubt, other than at a convenience, but I doubt that if you're out of town or you're in a different location than when your bank is, you're going to feel disloyal walking into the corner store and pulling out $100 from an ATM machine that's not your bank. I can't imagine you would ever feel embarrassed, ashamed, self-conscious. You probably wouldn't call the banker and just say, man, you know, I feel bad. You know, I was downtown and I had to get, you know, I needed $100 and there was an ATM machine. And so I went and got the money from that ATM machine. You would never do that. Does the loan cover my losses? Technically, well, no, okay? Meaning it's not here to make up income, right? So if you've got a business and you're making less, I mean, that's awful, right? So it's not to make up for that, okay? What it's to make up for is, because you don't have money coming in, you need money to pay your employees, okay? That's, I mean, when you really think about Paycheck's Protection Program, that's what this is all about. It's protecting the employee. And in some ways, it's not even really about the employer. It feels like it's for the small business. But like me as a small business owner, I feel very emotional and strong about wanting to make sure that I'm taking care of my employees, okay? So I never thought, like for a second, it's never even crossed my mind. I had someone ask me today, like, what are you doing with your employees? It never even crossed my mind for a second. I'm not even saying I'm better than anybody on any of this stuff, to let my employee go, employees go. And now, let me tell you this, those that are in that position, I'm not saying that that's a bad thing or to look back, you know, look down on you, or you should feel bad about it. If you didn't have the money, you didn't have the money, okay? But the purpose of this is to help your employee. Good question here. Can I rehire my old employee? Yes. Absolutely. I mean, that's the spirit of what this is. And I mean, there are a lot of small businesses. I don't think they're any of mine, because I was in front of my clients constantly in trying to, I don't know what the word is, but I was trying to say, hey, let's not make any decisions right now. Don't let your employees go. But if you've gotten in those circumstances, maybe laid off to go get unemployment, you can bring that employee back on, because it'll be a qualified expense. Now, whether you bring them on or you don't, that doesn't really matter here per se, but it's going to be a qualified expense. So the answer is yes. And if you're rehiring an old employee, give them a bouquet of flowers on their first day and welcome them back, because that's wonderful circumstances that they're able to come back and join your business. Let's see. Okay, I'm gonna bridge now into the payroll tax credit, and the payroll tax credits will go a little quicker, and we'll probably wrap up here shortly. But a number of questions, because I've been getting word out about the payroll tax credit, is, well, should I do the credit or I should get the loan? Well, it's two separate things. And the short answer is do both, okay? And the reason for it is that you're not gonna be able to double dip. It's not possible, and here's why. If you get a payroll tax credit, and I've got a ton of videos on this on my YouTube channel, but if you get a payroll tax credit of $2,000, then you paid in $2,000 less in payroll taxes, right? Follow me on the example here. You have $10,000 in payroll taxes, but you have a $2,000 tax credit, so you only paid in $8,000 to the government for payroll taxes. Remember 8 grand, right? It was 10, 2,000 credit, there's 8. So now when you're tallying up your qualified expenses, okay, which includes payroll taxes, you're only gonna be able to include 8,000, okay? It's not a bad thing. Now, you may think, well, but if I don't have the 8,000, that means that I borrowed too much. Let's just go back to, let's not sit around and wonder if you need a 30-foot fire hose or a 20-foot fire hose. You get the 30-foot and get her done, okay? And then now we'll go into the payroll tax credits. So the payroll tax credits, ton of videos. These are, so all I'm going over through here are just client questions, that's it. I'm not gonna go through how it all works. These are just client questions on the tax credits out of the Families First Coronavirus Relief Act, okay? So not the CARES Act, talking about the one that came out and was signed into play on 3/18, okay? So here's the first thing, and just go to the IRS website, okay? And you will find that on March 20th, the IRS said Americans and taxpayers, small businesses, can start using today the payroll tax credit. So it absolutely baffles me and just literally boils my blood that we have national payroll companies, shame on you, that are still telling my clients, and by the way, there's only 4 of you that are with these national payroll companies, okay? You're telling my 4 clients that for whatever reason haven't gone to Alliant, but you're telling these 4 clients, well, no, you know, the credit doesn't count till 4/2, because that's 15 days after it was enacted on the 18th, okay? Get with it, okay? Stop reading the article and what this company says and this research and, well, I subscribed to this and they told me that and I was on a webinar. Can you read? Can you read? Good, okay? Go to my website, go to the credits, and go to, because I'm tired, will you go to my website, please, Amanda, and go to JJ the CPA /credits and bring it to me real quick? Go to the law and just read it, please. I beg of you to read it because it's in English. I'm sure you can find it in Spanish. And it is so clear that it says that this is enacted within 15 days of basically when it was signed into law, or when the Treasury Secretary says go. March 20th, ladies and gentlemen, the IRS said that. IRS represents the U.S. Treasury, which represents the U.S. Secretary. Okay. No, jjthecpa.com, not the help one. Thank you, though. But here's the interpretation. Okay. It's March 20th. I don't care who you are. Go read it and then go to the IRS website. The IRS website, by the way, is public and is available to everybody. It's 24/7. You can log in, spend, 5 seconds looking for it, and you will find that you will find that the IRS said on March 20th, and it actually says March 20th, like they actually wrote on it March 20th, right? So we never be mistaken, ready to go. So when you look at, okay, just go read HR 6201, okay? Get your spectacles out, okay? And read, because it says within 15 days or. Understand the English language of or. Or means if the Treasury Secretary says it's earlier, then it's freaking earlier. Now, regardless of that, my clients are going to do better than everybody else, and especially the clients that are not clients of mine. I'll just say it that way. But here's why. Because I've read the law, but here's this. Check this out, okay? Here's the gold nugget in this section, okay? As Juan Garcia would say, the CPA marketer, is this. You ready? The credit is taken after April 2nd, okay? Or when they enact it, which is March 20th. And here's where the contest comes in. Here's where everybody's getting their sumo wrestler outfits on and ready to go to the mat. Well, I don't need to go to the mat. Just read 6201, because it nowhere says wages after the enactment date. Period. I don't care who you are and what CPA firm, and they got 7 names in the CPA firm, and this service and that service, and here's the news, and here's Fortune. I don't care, because I don't do a tax return and say, well, per this article I got, and per this, and per that, and per this, and per that. I look at the law. So work with people that look at the law. And the law does not indicate when the wages are effective. Now, what does that actually mean? There's 2 things going on here. When do you get the credit? And when did you pay the employee? Okay? Now, well, if I'm going to look at it like this, and I'm not here for the benefit of my client, and I am going to make sure that you're not able to do the best in the, okay, if you're going to be one of those jackweeds, okay, and you're working with a jackweed like that, fire them, okay, because I know tax law. I've been doing it for 27 years. I've taught thousands of CPAs across the country. I've been to over 50 cities, and you may say, well, big deal. Big deal. I know how to read the law. I know how to apply the law when I'm reading it, okay? And this is what's key. Until we get any further clarification, which we may get, the credit is after the enactment date. The wages can be before. So if somebody was out and qualifies for the credit, that employee qualifies for the credit, that occurred, okay? So what are the 3 events? Go to my other videos and you'll know. What are the credits? Go to my other videos and you'll know. What's the daily limits, the maximums, the total per each category? And then there was somebody, they asked that they had an employee that was on maternity leave. Do they qualify for the credit? The answer is no, because the employee has to be out for one of the qualifying reasons. And if an employee was already out, meaning they're not out because of COVID-related crisis, then no, they're not. That employer is not going to be able to count the time they're paying that employee for maternity leave because it's under the Family and Medical Leave Act. That doesn't matter. So no. How do I get the credit? Man, great question. This is the one that I've really been trying to get word out on. Is this? You get the credit by knowing it in advance and reducing down the amount that you pay to the IRS. What? Say what? Say it again. The amount that you're going to pay into the IRS, sometimes you don't really know what it is because you got a payroll company and they're doing an awesome job and doing the heavy lifting, right? And they just pull out one amount and it represents all your payroll taxes, and then the payroll company sends it to all the proper places. If you do your own, You're gonna get this, much probably quicker. But before that payroll company pulls money out of your account, you have to communicate to the payroll company, hey, I got someone that may qualify for a credit, or here's my credit, or whatever the case is. Because if your payroll taxes is $10,000 and you have a $2,000 tax credit, if you haven't communicated to your wonderful payroll company, okay, that you have a $2,000 credit, they're just gonna pull 10 grand and they're gonna send 10 grand to the government. So the way that the credit is achieved and experienced in the spirit that it's meant, which is immediate relief, is that you know that you have a credit of 2 grand, and so instead of 10 grand coming out of your pocket or out of your bank, only 8 grand's gonna come out of your bank. That's how you experience the immediate relief. So that's how the credit is achieved. Now, where it can be a little confusing, which makes sense, is that you do hear talk of, well, the IRS will send you a check. The way that you get a check is that you missed out on the opportunity and you didn't take the credit when you made your payroll deposit. So now you're going to go to the IRS and say, hey, I forgot to do this, so send me some money. The IRS indicated last week that they would give us this week the procedures and forms of how to go about that. That still has not been released. So the way that it's achieved is reducing down the amount of payroll tax that you pay in before you pay it. If you missed it, then you qualify to get a check. If you missed that, then you put it on your 941 to get a refund. It is treated as though you made a payment. Okay, a couple of questions back to the CARE Act. Can you use the loan to pay for the Family Medical Leave Act? Yes. So, and it doesn't have to be the Family Medical Leave Act because of the crisis, right? So I was just talking tax credits, so let's put that over there for a minute. I'm now talking the CARE Act, the CARES Act. It's specific to it, right? So you borrow that. Okay. Turn off some Wi-Fi. Hey, will you just go ask the boys to turn off their Wi-Fi on their phones as well? Oh, okay. Then never mind. So it doesn't matter if it's a new event, you have someone's going on maternity leave or they have a qualifying event to be out. Yes, you can use the proceeds to pay that employee to be on the Family Medical Leave Act, whether it's the original one or the expanded one. And then can I add staff that work prior to add them onto payroll? Absolutely, that is absolutely the spirit of the law, is to get people back working, getting the employees back paid. So yes, please do that. Absolutely counts. And then, okay, so is it true? So here's our, we have a math question. Is it true that you cannot pay an employee more than 10 grand for 8 weeks? Okay, so if they're making 10 grand in 8 weeks, then that's 5,000 a month, okay, which is 60,000 a year. If they make more than 5K a month, do you decrease their pay for 8 weeks? Okay, let's definitely answer this one carefully. The qualifying amounts for each employee's payroll is up to 100,000 annually. Okay, so if you were to take 100,000, right, divided by 52 weeks times 8 weeks, that would be the maximum. So if someone's making 10 grand over 8 weeks, which would be 5 grand right over a month, that's 60 grand a year. So all of that should be a qualifying expense. Okay, and then if they make more than 5K a month, do you increase their pay for 8 weeks? No, because this loan that you're getting is to go towards payroll. It's not to be, now here is your payroll, okay? It's to be, here's money for rent, here's money for utilities, the mortgage interest, health insurance, retirement match, payroll taxes, and salaries, right? So think of it this way. You went and borrowed money only based on payroll, right? What's my last 12 months of payroll divided by 12 times 2.5? That's how much I get to borrow, but only was payroll. Now I'm gonna take what I borrowed and I now get to spend on qualified expenses to get forgiven later, the employee's wage and the taxes and the interest and the health insurance and the utilities and the rent, right? So there's really no way that you got enough to cover all that, all things being equal, right? I mean, if your monthly payroll is, 30 grand, right? If your monthly payroll is 30 grand, including all those costs, so that would yield a $75,000 loan, right? 30 grand a month, all those costs times 12 is 360 grand, right? So you take the 360 grand down to 30 grand a month times 2.5, that's a $75,000 loan, okay? So now you got 75K. What are you gonna pay in those next 8 weeks, okay? Well, if now you're including the rent and all those other expenses, you probably didn't even borrow enough, okay? Now, if you're following here, the mindset, which is you're borrowing 2.5 payroll, okay? 2.5 times payroll to then pay for payroll plus these other expenses. In essence, they're giving you extra to cover these other expenses. So no, it's not meant at all to decrease that employee's salary just because you didn't borrow enough. Look at it as you've got money to help pay whatever it is that is going towards that, not as a way to have to reduce it. All right, I think I've got 3 more here. Should I pay someone just to get the tax credit? No. And the reason why, now I'm not trying to be I'm pro-employee here, but the reason why is that you still had to pay the employee, right? So you still had to expend those dollars. Now it may yield the credit and it may feel like, okay, I made whole here, okay? But if you didn't pay the employee, okay, let's say that the employee's pays 5 grand, okay? Well, if you didn't pay the employee, you have 5 grand sitting there. If you pay the employee, you no longer have 5 grand sitting there. Now you may get a $5,000 tax credit, which is less money coming in, less money going out over here, but you still spent the 5 grand. So point is that if you can't pay them, you can't pay them. And by paying them and getting the tax credit is beautiful, and it does put you to a neutral position, but you did let go of the 5 grand, meaning you spent the 5 grand to pay the employee, which we should do. Here's a big one. If I'm an essential business, right? So if you're a business, and now this might be more specific to Oklahoma, but in Oklahoma, the governor defined what an essential business is, which started with what's an essential business to the U.S. government, and then there were some other things, restrictions that were added related to that. Long story short, if you're considered an essential business, now remember we're talking about tax credits here. If you're considered an essential business and you decide, I'm going to go ahead and send my employees home, and there's no other qualifying event there, you're not going to get a tax credit, okay? Because the only way you get a tax credit, okay, we're not talking about loans here, we're talking about the tax credits. The only way you get a tax credit is that you paid an employee that didn't work, right? That was out they had COVID-19 or symptoms of quarantine or told to quarantine, or caring for somebody that had COVID-19, symptoms of quarantine or told to quarantine, or was someone who had a child under age 18, son or daughter is what it says in the law, that the school's closed or they had a care provider, okay? So if you're closing and you have an employee that's meeting one of those definitions and you're still paying them, then you get the credit, okay? But if you're an essential business, you don't get the other avenue here, which is the health emergency that's been declared doesn't apply to you. So it does provide relief if you're a non-essential business and you are required to send all of your employees home. So that might be a little state by state, but the only little bit state by state is determining essential and non-essential businesses. All right, so on the tax credits, when do you need to know it? And does my payroll company know already? And the short answer to both of those is you need to know what your payroll tax credit is before your payroll company pulls the money out of your bank account. That's when you really need to know, before they pull the money out. And no, your payroll company is not going to know. Now, they may ask, there might be a questionnaire, just depends. Okay, I wouldn't rely on it. I know that I sometimes pick on payroll companies because I'm very favorable to the one that we use, but if your payroll company is not aware that you gave an employee a raise, how are they going to know you gave them a raise unless you told them, right? So they're not going to know that you let people off. All they're going to know is that you paid your employees and they're going to pull taxes out. So you have to communicate to them. Okay, looks like got one more question here, which I really appreciate. Thanks for tuning in. Okay, if a small business receives an SBA forgivable loan, can they still request tax credits? Yes, but let me be real clear here. So I appreciate you saying this so that I can provide some clarity. Is that the SBA loan is completely separate from the forgivable loan. Now, you might have a banker that has a pocket protector because they're a CPA banker that's going to go, well, technically the forgivable loan is administered by, okay, what I'm more having fun with here is please make sure you know that the SBA loan and the forgivable loan are completely different, the same. The names don't go together, okay? So let me just say this. If you receive an SBA loan, you can use the tax credits. If you receive a forgivable loan, the Paycheck Protection Program loan, you can use the tax credits. But hang on, you absolutely can use the tax credits. Can I get that pin? That red pin? So we said it earlier, but I'll do this real quick because I do really want to make sure that this point is really understood. So I'm going to say here that I'm going to hold this up in a second. So you have someone that has $10,000 in payroll taxes, okay? And they have a $2,000 tax credit, okay? This payroll tax credit. Okay, so then this is going to be easier to see it. So they had $8,000 net paid to IRS. Okay, so now we got two different things going on here real quick, actually three. So the first thing I'm going to show you here, don't worry about the loan, don't worry about if it's qualified, don't worry about anything. The first part is this right here, okay? So this person has $10,000 in payroll taxes. They have a $2,000 tax credit. So then only, we're live on LinkedIn too, sorry, make sure this. So the employer only paid in $8,000 to the IRS, okay? The tax was 10 grand, they got a $2,000 credit, but only 8,000 left their account and only 8,000 was paid into the IRS, okay? So that's then what was paid related to the tax credit. Now, on the loan proceeds, hang on, because this is a great question. On the loan proceeds used for qualified expenses equals forgiveness. It's going to be worth the wait to see this. Forgiveness. Okay? So I'll hold this up. So that says loan proceeds used for qualified expenses equals forgiveness. Okay? So only 8,000 is the qualified expense, right? So if you got a loan of $75,000 and now at the end you're trying to figure out, well, how much of my loan is going to be forgivable? Well, because you only spent $8,000 on payroll taxes, then only $8,000 is considered the qualified expense. So don't get me wrong, you definitely want to take advantage of both things because, as I said earlier, you're most likely not going to be able to borrow enough. I mean, when you take into account you're getting 2.5 times payroll to then pay for 8 weeks of payroll taxes, but it's the rent and it's the mortgage interest or business interest and health insurance and the retirement match and the rent and the utilities, right? That very well could be, especially in small businesses, that all could be much higher than the amount that's borrowed. So all full back to the CARE Act. I would just here would be my biggest takeaway for you all on back to the CARES Act as it relates to the payment protection program loan. Okay. Get that over an SBA because it has the possibility of being forgivable. Get that forgivable loan, the PPP loan, as soon as humanly possible because it may run out. If you're working with a bank that you absolutely love and they're asking you for stuff that when you look left or right, no one else is being asked for, go to another ATM machine. Looks like we got another comment, maybe. Go to another ATM machine to get that so that it doesn't run out. Okay? No? Oh. And get it. Here's my biggest takeaway, and then we got one more question, which I appreciate. Your biggest takeaway from here is get the max that you can. If you don't use it all, you just pay it back. And you can just pay it back immediately. But get all you can. You know why? Because I've put this in other videos. We can't rely on what we've always relied on. Okay? Now it's starting to feel good, okay? Like relieving. Oh, man, there's a life preserver coming. Oh, and you haven't gotten out of the water and you haven't even reached the life preserver. But it might be okay to think about, wow, what am I going to have for breakfast tomorrow morning? Forgetting you're still in shark-infested cold ocean waters and you haven't even gotten to the life preserver, let alone on the boat, let alone to shore, let alone to the next morning, okay? Stay in the moment here and get the amount that get the maximum amount that you possibly can, because how do you know, okay? And with all due respect to anybody, how do you know we're back in business by Easter? How do you know that, I hate to even say it, how do you know it doesn't get worse? Okay? I mean, it's there, take it. Take the 30-foot fire hose. Don't worry if you need a 20-foot or a 10-foot, because when the fire's out, whatever you didn't need, you just give back to them. All right. We got the other question? Almost done. Thank you. Also, on the payroll tax credit, once we get past this, like when does it apply and this and that, here's what I would tell you is, if you're in a situation and you're getting that payroll tax credit, okay, if you have a payroll company or somebody's like, well, it doesn't qualify right now, or it doesn't, or we don't know how to do it, or we can, or nuh-uh, or nope, whatever you're hearing, don't give up. Just keep that tax credit right there, because you can get it on the next payroll or the next payroll, the next payroll, the next 941, okay? And if you still have a payroll company that's telling you you're not going to get a payroll tax credit, I'd love for you to fire them and hire the company that we're affiliated with, because they're not saying that kind of stuff. Awesome. All right, 2 questions. Can essential business that have some employees that want paid leave because they fear the virus can apply for the tax credits? So it's a really good question, and this is an unfortunate situation of no, it wouldn't qualify for the tax credits. unfortunately. Now, let's clarify in the question. It was, can an essential business that has some employees that want to leave because of the fear of the virus, can they apply for the tax credit? So, it's the employer that gets it. We're talking about an essential business, right? So let me put that aside for a minute. If you have a non-essential business, okay, it's not, let's first look at, in Oklahoma, if you're non-essential, your business is closed, employees are going home, okay? Now you might have an employee that's concerned about the virus, right? Well, that's not technically why they're going home. They're going home because the business got shut down. So you're in a completely different circumstances, but that's non-essential. Now you're in a circumstance where you can get a credit there. But when you're on essential, unfortunately, the fear of it, which is valid, is not enough. Now, don't hear me wrong on this. Please don't hear me wrong. And if you don't know me, you could easily take this out of context, because I have the most integrity, and I'm very consistent with the CPA standards of having integrity, okay? I don't play games. I follow the law. I do things right, and I want my clients to do things right every single time. Don't hear this incorrectly, but if an employee says, I think I have the symptoms consistent with COVID-19, essential or not, the employer, if they pay that employee, would get the credit. So I'm not saying making it up, but I am saying it's like really fine line, but an easy fine line. So again, I'm not advocating making it up. And I'm definitely not a COVID-19 expert, but we're learning that it's not just here's the 3 symptoms, it's all kinds of symptoms. So if you have somebody that's concerned about getting the virus, okay, definitely aren't going to get a credit, whether you're essential or not essential. That doesn't matter, unfortunately. But if they have symptoms consistent with COVID, right now, they're everything. And in Oklahoma, we can't get tested. I tried to get tested a couple of weeks ago. And you still can't. Long story short, there's no way to know if I had COVID-19, but I had symptoms consistent with that, and I had 2 different doctors say, you don't need to take a test to just self-quarantine. Do I have the coronavirus or don't I? You know what, just self-quarantine, just go do it. They were saying, go get the test just to, see if I have it, if there's a statistic to be known. All I'm saying is this: I had symptoms that were consistent with COVID-19, and I was under self-quarantine, and my business qualifies for the credit on me, especially given that I didn't get any work done, okay? All right, second question. Are essential companies excluded from the SBA?
EIDL.
Oh, so is that probably the EIDL? I apologize. I'm not sure what the EIDL is, but because you said SBA, did they clarify?
Are essential companies excluded from SBA, EIDL, and/or Paycheck Protection Program?
No. They're not excluded from anything. So I apologize. I don't know what the EIDL is. Maybe you can Google it real quick. But just know this: whether it's essential or not, okay? Let's talk tax credits for a minute. Essential, non-essential. If you got an employee out with COVID symptoms, or has COVID, or is under quarantine, like they just said, I'm going under quarantine, or they had a health professional say, go out of quarantine, essential or non-essential business, they get that tax credit. If you have someone that is an employee and they're caring for somebody that has COVID-19, self-quarantined, or symptoms, that employer is going to get a tax credit, essential or not. If that essential or non-essential employer has an employee that's out because of school, okay, meaning they have kids under 18, they're out of school, they are going to get a credit, okay? If you're essential, and you just want to send everybody home, you're not going to get a credit. If you're non-essential and you just want to send everybody home, you're not going to get a credit. If you're essential and there's a government shutdown and you decide to send somebody home, you're not going to get the credit if they don't meet any other criteria. If you're non-essential and the government has shut you down due to a health emergency, you're getting the credit because the government said you're no longer in business here temporarily. Did they clarify?
It means economic injury disaster loan.
Oh, thank you. No, they're not excluded from it. And then the Paycheck Protection Program, so the loan, yeah, no way. And here's why, whether you're essential or non-essential, that you qualify without a doubt, is that it's absolutely, you're probably, I mean, I hate to say it this way, but an essential company is in a crisis. It is more vital that those employees get paid. It is more vital that the essential businesses get the money to stay open, to whether it's producing the essential product or provide the essential services. So not to say it's more important than another business, but the government's saying it. I mean, the government's saying non-essential businesses, we don't need you open right now. If you're essential, you're open. So if the ice cream man's coming down the road and they got $1 to hand out, okay, the government's going to go, it's going to the essential business there, folks. Okay, we'll worry about you later. The only reason I'm bringing up that example is absolutely an essential company should be able to get the SBA, the EIDL. They will be able to get the Paycheck Protection Program, the tax credits, whole 9 yards. So something else popped up just in case. We're good?
Just telling you, thank you.
Oh, all right. Well, hey, thanks for tuning in. Just letting you know real quick, if you don't mind, I'm going to be on Fox News tonight, like the national Fox News. I'm pretty excited about it. It's at 2 a.m., but you know what?
2:50 a.m. has been confirmed.
2:50 a.m. I'm down. Central Time. Sweet. And I'm going to be on the New York City radio station tomorrow on iHeartRadio. We'll get a link out to that tomorrow morning at 9 a.m. talking about these issues. Monday morning, I will be on Newsmax, which is a national news program at 9:30 a.m. Central Standard Time. I'll continue to put out videos on my YouTube channel. Hashtag JJ the CPA. None of this I'm seeking compensation for. So listen for free, but just let you, I wrote a book, it came out last fall, but it does have some good essential things that apply to now, because I talk about business and insurance and banking as well as tax. But when you're in a situation of needing loans, you might be in a position where, well, I appreciate that. I tell you what, we'll wrap up, but you can email me at jj@jjthecpa.com. Thank you so much. Wonderful compliment. If you don't mind, if you haven't subscribed to my YouTube channel, it'd be a notch in my belt if you did. And I'm putting out YouTube videos all the time and on social media trying to get information out there. And I'll just tell you this, I love what I do. I love being a CPA. I'm honored to be in a position to help and to help my clients. And I'll just say in closing, I created COVID19taxhelp.com. That's www.covid19taxhelp.com. And I guess I should have picked a different name, because I've had people on social media like blatantly tell me that I'm a scam artist and I'm taking advantage of people in disaster. But anyways, COVID19taxhelp.com is something I put together as a community service. It's not a funnel. There's no link. I don't ask for any information or an email. I don't want to know who you are in the sense of you just get to go to the website, but it's a full resource. I have a survival guide on there, a way to help you figure out your cash position in 21 days so you know it now. I have a worksheet on there on how to help you figure out your tax credit. These are all things I put together for my clients, so now I'm just putting it out there for free. I haven't even charged my clients for them, but I'm putting it out there for free. I'm a certified public accountant, keyword public. I'm here to serve the public. So let your friends know. It's www.covid19taxhelp.com. I'll let you know on a little secret, okay? I did the COVID19taxhelp.com initially because I thought, well, if I put this on social media and I do a page, there's probably a more of a likelihood someone will get the help that I'm trying to provide here for free. I'll give someone 10 grand if they can find on my website where it's leading to somehow I'm getting some kind of compensation here, or even their information. But it will redirect you to the true heart of the free website, okay, which is jjthecpahelp.com. So don't mean to confuse you. I'll put some details in the bottom there, but at the end of the day, I'm trying to get information out there. I do have jjthecpa.com, but I'm really putting information on there for my clients. I'm putting the exact same information on jjthecpahelp.com, but I'm putting more on that one because on my client, okay, I'm selling a t-shirt and talking about my iTunes song and my podcast, and I'm kind of showing off a little differently because that's just my website, right? It is promoting me. It's how to hire me. It's so on my business website, I'm not going to change what I was doing on my business been around website. That's why I created jjthecpahelp.com, and I was trying to actually not get any credit for it. So that's why I came up with COVID-19taxhelp.com. It's a long way of saying this. Thank you for tuning in. I appreciate it. And then if you haven't watched my videos before, thanks for tuning in. But if you have, you always know that I end every video by saying, you've never met a CPA quite like me. All right, JJ the CPA out. Thank you so much for tuning in. I love you for it. Be well. And take advantage of everything you can. Watch my other videos. Thank you so much. You have a great night.